Traders, welcome back to the BlueFX 101 series where we answer some of your most commonly asked questions from our trading community. Today we're talking about margin. What is margin, first and foremost? How does it affect my trading? And how much margin is available on my account? Okay, without further ado, let's get straight into this. First slide. Quite a simple one. What is margin? Margin is the practice of borrowing funds from a broker to trade a financial asset. Margin is not a cost or fee, instead the percentage of the trader's account balance that is needed to maintain or open a trade. Okay, so let's just pause for one moment. Think of it like this. When you place a trade, that trade has a value in currency, in a money value each trade will have. So that depends on the amount of contracts you're buying or selling. Same thing with stocks, amount of stock you're actually buying or selling in that case. So the trade itself will have a currency value. So let's say in this example, the value of the trade that I want to place is $100,000 and the margin requirement is 2%. It means that to trade with $100,000, I only need to deposit 2% personally into the account. So that's $2,000 in that case. Of course, this excites a lot of traders to be able to have access to this massive amount of capital with only depositing $2,000, but obviously it's a bit more complicated than that. Now, as you say, this has effectively increased the size of our trading position and it gives me access to a lot more capital than what I have initially deposited into the account. Now, if you're paying attention, you might have realized through our video last week on leverage that margin and leverage are very closely related, and actually often the terms margin and leverage are used in a very similar context, but this is the way I remember it, is that margin is used to create leverage. Think of margin as that is what's giving you the access to the increased level of capital, and leverage is just sort of describing the effect of that small amount of capital being leveraged into a larger amount. It can be quite confusing, but truth is, if you watch this video and the one we did last week on leverage, which will be on the top right hand side right now, you'll be pretty much up to speed with exactly how we operate at BlueFX and what these terms mean. Let's move swiftly onwards. How can it affect my trading? Of course, this is something really important to know, how it can affect your trading in general. Margin needs to be managed by the trader so they are able to open and maintain positions at will. If there is not enough available margin in the account, trades are not able to be opened. And there is nothing more frustrating than this, having a fantastic setup happen in front of you, but you're not able to enter because your margin is out of whack and you've committed it all to another trade and you don't have enough to play with. If you want to have different trades running alongside each other, perhaps you're going to go long on the cable and you're going to go short on the USD CAD. If you put all your margin requirement allocated to one trade, you can't take the second one because the broker won't let you. They're not going to let you play with all their money. They're going to require you to put in a certain amount, that margin requirement percentage we just spoke about. So you never want to be in that position where you can't stay in a trade or you can't open a trade because you don't have enough margin. And this is something else really important to remember. If a trade is running at a loss and maximum margin is used, a margin call will occur where the broker asks for more capital from the trader to cover a losing position. Now, here at BlueFX, that's very unlikely to happen just because of the risk structure we have in place for our traders when they get funded with us. But outside of trading with BlueFX, you might experience a margin call where the value of your account equity has gone down because you're in a losing position. And of course, now the value of the account has gone down, they're going to require more money to cover that position. Because if you've deposited that $2,000, like in that example earlier on, with a 2% margin requirement on a $100,000 trade, you deposit that $2,000, but now you're in a losing trade, and the value of that trade is now $1,900. You've entered into drawdown. The broker will ask for you to put more capital in to cover that position because they don't want to be in a position where you're using their money irresponsibly and not managing your losses. Now, very similarly to leverage, using margin can result in larger profits, but can also cause large losses that can impact the account balance significantly. I've said it once, I'll say it again. This is one of the biggest reasons traders remain unprofitable in their trading. Same thing as leverage, guys. You've heard me talk about it before. Because you have access to that amount of capital, things are accelerated and amplified. Your losses are bigger and so are your wins. But you can take your account to zero once, you can double it as many times as you like. So think about that as well. Next slide. How much margin is available on my account? Now, there is very, very complex formulas and things like that goes into this. It sort of varies on many different things, including the account size, the actual currency value of your account, $10,000, $25,000, etc. Exchange rates between the base currency and the account currency. So that is the base currency of what you're trading versus the account currency, what currency your account is held in. Obviously, here in the UK, accounts can be held in British pound, for example. More often than not, you'll see them in US dollar. That's the account currency. And obviously, what level of leverage is offered is also a variable. Again, check out the video on leverage for a better explanation. Now, I could bore you with the whole formula, but I don't think that's particularly helpful. What I'll say, if you're trading with us at BlueFX, refer to the video on allowed pairs and lot sizes. Again, top right hand side right now. That episode of BlueFX 101 will let you see what the maximum position sizes are available at each level of funding. It's a very similar question to asking what amount of leverage you're able to have. They sort of cover the same bases in that sense. Okay, last thing. Key points. So these are the things to remember. If you want to rewind and go back to other things and take some notes, you're very welcome to. If you want to pause and go back, you're welcome to if I'm going a bit too fast. But what's really important is we keep this short and sweet today. Margin is the required amount set aside from a trader's account balance to open a trade and keep it running. Okay, that's number one. Margin needs to be managed by the trader so they're able to open and maintain positions at will. Remember what I said about that being very, very frustrating. If you're an inexperienced trader and you can't enter other positions because you have allocated too much margin, you scaled in too aggressively on a trade, so you can't take the second or the third. And also very importantly to remember, using margin can result in larger profits, but can also cause large losses that can impact the account balance significantly. There we are. That's everything you need to know about margin. If you want to read more into this, I will leave a link in the video description explaining all of our trading parameters, including margin. If you want to have a look at the formulas and stuff like that, that's all in the description for you to have a look at. But this video alone should really help you understand what margin is, how it works, and how we operate here at BlueFX. It's a pleasure as always, guys. Take care.